What is up, YouTube? Welcome back to Stacks by the Numbers, and I wanted to do a quick look into Terran Orbital Corporation, ticker symbol LLAP, listed here on the New York Stock Exchange. This is another satellite-type telecom company, and stock right now a touch below $1 a share at 97.25 cents. It's up about 7 1/3 cent today, 8.2% here on the day, and this company seems to be very inconsistent. And I know people are touting some of the orders that they received. I know Rivada, I believe, is the name of the company. They gave them like supposedly like 2.4 billion worth of orders, and they have a backlog growing up to 2.8 billion. How almost reminds me of STEM though, with the way that we're touting this backlog. The company is dealing with a lot of bleeding right now. We're seeing debt increasing. And also there was a potential buyout from Lockheed Martin, who I believe put in an order for 18 vehicles or whatever it was from Terran Orbital, and currently has a contract, they say, going out until 2035. And Lockheed Martin actually owns a chunk, I believe it's like 35% of the float here of LLAP, and supposedly put in an offer for roughly about 300 million to just buy out the company at around $1 a share, and then they withdrew their bid. So I'll get to that in a minute, but in my opinion, that may tell us more than people want to accept here. But stock right now, as we see, I connected these trend lines here from the bottom, October 23rd, 23, touching to December 11th, 23, to those bottoms there, February 6th, 5th, and 6th coming across. And you can see the stock recently dropped down here with these earnings coming out. The company missing both the top and bottom lines by a mile. Estimates on the revenue side, 45.36 million. The company posts 27.2 million. If we go back this time last year, that was this quarter, right? Yeah. So if we go back this time last year, the company brought in 28.2 million, we'll call it, missed the estimates again. And now we're down to 27.235. And technically, those numbers are lower, obviously, year over year, which doesn't really add up to me, in my opinion, especially with the growing backlog and whatnot. But you know, it may have just been a rough quarter, but before that, we can see a very slight miss on the revenue side with a wider than expected loss. And then before that, we beat on the EPS side, but we missed on the revenue side. Estimates jumped up above 50 million. They brought in almost 44. Not the worst report we've seen, but just a lot of inconsistencies and more red than green really overall. But let's get into it. So we have a market cap here, 195 million. We're losing 81 cents a share. The company was doing well with these losses here, Q2, Q3 at 23. Then the last two quarters losses began to widen. We can see here the revenue climbed up here to above 40 and then pulled back to 31, 27. And you can see the losses really widening there. Net margin dropping to almost minus 200%. So cost them 53 million to make 27 million. So a little out of whack right now, but everyone's looking at future growth, the backlog, future revenue coming in. So everyone's pretty pumped about this stock. And I kind of understand why, but in the immediate short term, I actually don't understand why. But maintained with a $3 price target here at H.C. Wainwright. Maintained at buy at Stifel, $7 a share price target. And we can see the company came out, reported earnings yesterday, and revenue down from a year ago. As we see here, loss wider than expected. We're reading. 4 giving it a strong buy, 1 giving it a hold. Average reco is a buy. Average price target is $3. 2 misses, 2 beats. But it was the withdrawal of the bid. See, as you see here, impact with Lockheed Martin to produce 18 satellite buses. Lockheed Martin research space development tranche. End-to-end solution. Space manufacturer, robotics facilities, California. Will accelerate the capability to provide global precision to track missile threats as well as to deliver preliminary missile defense capabilities. So now, I appreciate the fact that they do supposedly have a growing backlog, even though, of course, the revenue has been underwhelming recently the last couple of quarters. So that's why it's unfortunate, because I don't want to necessarily put this in the realm of STEM, but, we've seen a situation like this before. But also, as I mentioned, about, I believe it's like 2.4 of that 2.8 billion backlog is from that Rivada company. But I think also it said that the delivery wasn't happening until 2025, but you can see Lockheed Martin drops 300 million buyout bid for Terran Orbital. Okay, so think about this. If you own 30+% of a company, you put in an order with the company for 18 satellite buses. You have a contract with this company going through 2035. You offer to buy out the rest of the stock at $1. And then you withdraw your offer. So in my opinion, the way I am looking at it is that Lockheed Martin must be convinced that they're not worth 300 million. That is just my opinion. That is the conclusion that I came to. Because again, if you're in contract with these people, if you sign a long-term contract, again, we're talking over 10 years, right? We're in 2024. Contract's good till 2035. So we have a 10+ year contract. You already gave them an order. You already own over 30% of the company. So you put in a bid to buy the rest of it at $1, and then you withdraw that bid. This is what I'm trying to explain here, that in my opinion, that doesn't make sense. And if you pull your bid, then either A, you no longer see value there, or B, you feel you can get the same acquisition for significantly less. And if we look at some of these financials here, we can see why. Okay? So if we come down here, we can see, yes, revenue has been climbing, as we see over the years, going from 40 to over 90 to over 135 million. For 2024, estimates of 237 million, we'll call it. On the quarterly side, we missed 4 quarters in a row. On the EPS side, we consistently miss here annually. On the quarterly side, again, we were climbing nicely, and then now we have wider than expected losses here for the last 2 quarters. We can see the debt increasing consistently, 178 million, 188, 195, 202, 211.38 million. Current market cap, 195 million. So our debt is now outpacing our current market cap. We have about 43.7 million in cash. This time last year, they had 57 million. Free cash flow got a little more narrow, though. As you see, this time last year, a loss of about 36 million on the free cash flow. Now we're up here at minus 25 million. Assets basically in line with short-term liabilities, and of course long-term liabilities significantly outweighing long-term assets. This company bringing in, again, tens of millions in revenue here, apparently dropping off and missing for the last 2 quarters. Cost of goods sold kind of being maintained here in the 30 million mark. Total revenue minus cost of goods sold yields gross profit. You can see as of last quarter, minus 6.16 million. That is the second worst it's been, going back to Q4 of 22. Operating expenses basically staying in line here at the high 20 millions. Gross profit minus operating expenses yields operating income, and we can see now operating income back down to minus 34.5 million. That is also the second lowest it has been, going back to Q4 of 22. Switching over here to the balance sheet, we can see that assets over about this 18-month window here, assets have increased, we'll call it, about 30%, going from 150 million to almost 193 million. Liabilities, though, have almost doubled, going from the low 218 million mark here up to about 400 million right now. Assets minus total liabilities yields total equity, and we can see the equity has been consistently decreasing and has now tripled to the downside here. Was minus 67.6 million, now sitting at minus 207 million of negative equity, which results in a negative book value per share, which as you see has doubled over the same period, going from minus 48 cents a share to over minus $1 a share, which is why I'm saying now, with the company trading sub $1, we may be potentially running into a reverse stock split that could be coming. Also, if the company is now losing $2 for every dollar that they're making, even though they have a backlog, if they may not really be able to get their ducks in a row for maybe the next 2, 3, 4 quarters, then we may see a new offering to raise some capital potentially. But of course, it's just speculation. But in my opinion, believe it or not, it seems more negative than positive. And we live and we learn, and this is what I'm now kind of on the negative side of the fence with LLAP, because I'm just thinking about STEM, and I understand that they're completely different companies, and they're obviously going down different paths, but again, with the supposed growing backlog and everything's great and everybody wants them and there's going to be so much value and so much growth over the years, yet the company in the moment is reporting some underwhelming numbers. Until they get back on track, get the losses in line, and actually start to report in line or above revenue estimates, in my opinion, we may continue to drop down as opposed to rise up. Our return on assets is down. Our return on invested capital is down. Look at the gross margin percentage here. Was positive, drops bigly negative here, minus 34%, back up to positive 2.5%, gets up to 22%, goes back negative. Now it's negative 22.6%. Operating margin, minus 126.5%. That's the lowest it's been going back the last 7 or 8 quarters. EBITDA, earnings before interest, taxes, depreciation, amortization, down here at minus 116.33%, we'll call it. That's the lowest it's been going back the last 7 or 8 quarters. Net margin percentage has dropped to almost minus 200%. That's the lowest it's been going back the last 7 or 8 quarters. Inventory turnover has essentially dropped in half here from the 8s and the 9s. Now we're in the low 4s. Asset turnover has increased, but of course, assets have gone down. Our debt ratios obviously are increasing as the debt is now more than the current market cap of the company. If we look over here on the EPS side, we can see we have 4 beats, 4 misses, so we're very mixed. And of course, wider than expected losses here. Even though they technically did miss Q4 of 22 and Q1 of 23, they missed this Q4 of 23 and Q1 of 24. So if these trends continue, they may potentially post more narrow than expected losses now next quarter, moving forward to Q2. The revenue side has been pretty dismal. And again, in my opinion, I'm not trying to bash the stock, but we see we had this one quarter here with revenues jumping up to above 40 million. Other than that, revenue has basically remained kind of stagnant, as you see, in my opinion. I mean, we're sitting here, in the high 20s, low 30 millions occasionally, but technically missing these estimates for the last 5 quarters in a row, right? And we have the growing backlog, we have the interest from Lockheed Martin, and that's what I mean. With all of these positives going on, apparently the company is still missing revenue estimates. Now, we're expected to get back into the 30s here. We have about a $34 million estimate coming for Q2, and then after that, it's really expected to pick up here, almost doubling to 65 million, and then we're going to get into the 80s. So if this company is actually able to do this, then in my opinion, we may start to see some momentum coming into the stock, but also they have to make sure they keep those losses in line as well, because as I mentioned, I feel that we may potentially have to raise some capital here maybe down the road. But switching over here annually again, we can see we had 2 beats and we had a slight miss there in 23. 2024 revenue expected to come in at a touch below 237 million, and then basically double going into 25 at 582.25 million, and then almost double again, eclipsing $1 billion by 2026. Yet the company will still be losing per share, as you see here. With these jump up in revenue, we see losses expected to maintain here throughout 2024, 25, and 26. So not necessarily a red flag that the company won't be profitable, but again, at the same time, that basically tells us that they're consistently going to be operating at a loss right? Which, again, as I mentioned, may lead to some shaky financial decisions that may have to come in down the road. But overall, in my opinion, I understand the growing backlog, but again, it's not proven until it comes to fruition. And also on the flip side, I'm telling you right now, if I was at Lockheed Martin, and again, I understand this is just my opinion, but if I was at Lockheed Martin, I had a 30+% stake in LLAP. I put in a bid to buy out the rest of the stock for $300 million at $1 a share, and then I withdraw my bid. That tells me that I saw something. That's what that tells me. Either A, it's just not worth buying, or B, it's worth buying, but we can get it for much, much less, right? So if we can come in at a much cheaper price and we can scoop up those remaining shares for like $100 million in change cost as opposed to $300 million, obviously that'd be better for us. And I know some people, they may look at the Lockheed withdrawal bid as a positive. They may look at it as a negative. But again, we are talking about Lockheed Martin, a staple brand name defense contractor here in the U.S. Some say arguably they basically run the defense sector. But why would they withdraw that bid? That's what I want you to think about. Why would they withdraw that bid? And again, it's because of the current state of this situation. And they may feel, again, like I said, that it may take too long for the revenue to start coming in from this backlog. The company's going to keep burning cash. The debt is increasing like crazy. Again, more than the current market cap of the company. Talking about 40 million cash on hand. We have a negative book value. Assets went up, but liabilities essentially doubled. Book value more widely negative. Again, in my opinion, that is the way I am looking at it. That is the way I'm looking at it. Because in my opinion, it will probably eventually break this resistance trend line that it's been bouncing off of. And we're going to drop back down into the 60s and potentially 50s. We have a 52-week low of 62 cents. And in my opinion, that is actually justified, believe it or not. Because, again, even if we compare it with STEM, right, that's what I mean. STEM has a lot of negatives as well. However, assets technically are outweighing liabilities. We have positive equity, even though it's decreasing. The book value has been taking a hit, but it's still positive, and it's actually higher than the current market price. We have a market cap of 200 million, equity 370. And the debt obviously is massive, but again, assets outweighing liabilities, we technically have a positive book value. This is why, even as bad as STEM looks, and as much as it pissed us all off, I actually think Terran Orbital is in a worse position here. So again, yes, if I was Lockheed Martin, I also probably would have withdrew my bid and said, nah, we could probably get this company for pennies on the dollar. We probably don't even have to pay $1 a share. You can see the recent rejection here. I know earnings just came out, but you can see the rejection here off the 50-day moving average. Looks like MACD is crossing to the downside there, so that's why I say, in my opinion, it's only a matter of time, I feel, before we break that resistance trend line and drop down, potentially retesting those lows. RSI down here at about 44 1/3. On the weekly, the RSI just hit 30, so that's probably why we're seeing a little bounce here, trying to come up off of this support level, this support pivot point here of 91 cents. You can see we drop down and then we kind of bounce right back up. We're up about 7% right now. RSI at 35, but in my opinion, even if it tries to retest the 200-day here at 104, it has a very good chance to reject and then drop back down and retest that 91 level. But in my opinion, it's only a matter of time before this stock should drop, really, in my eyes anyway. MACD has been falling straight down. Let's check the Bollinger Bands real quick and I'll let you go. I mean, the overall story sounds good. And, like maybe 2-3 years from now, If the revenue does start chunking in, then I understand. If the stock starts to gain some momentum, they get the losses in check. Now, all of a sudden, they're getting closer and closer to flatness, and, they're forecasting profitability coming down the road. Obviously, we know these are all good things that can potentially happen, but they're not happening until they happen. And looking at the Bollinger Bands here, you can see we had the big widening here and the trumpeting taking place, but now the stock is staying down, so we have our top Bollinger Band kind of curling and coming down here. And bottom Bollinger Band, 88 cents. That's why, again, in my opinion, if it pumps again another day, a couple of cents here, it could reject and drop down to sub 90 cents, in my opinion. That's looking at the daily. Here on the weekly, we can see we rejected the 50-day. We rejected the mid Bollinger Bands as well. Bottom Bollinger Band, 69 cents, with the MACD crossing to the downside after rising, even though the stock was falling. In my opinion, I agree with that. I think the stock should be down at 69 cents. And I just feel like they don't have the fundamentals in this moment. And again, I know people are going to cite the backlog. And I completely appreciate where you're coming from. You guys know, I'm not trying to bash your companies. I just call it like I see it. But again, just a reminder. If you're citing the backlog and you're saying, oh, the stock's going to be, $2.50, $3 in, 6 months. You watch. Listen, of course, I hope it happens for you. I wish all of you the best of luck. But just remember, if you feel that way about LLAP, then technically STEM, with the assets outweighing liabilities and the positive book value, right? Technically, something like STEM should be $7, $8, $9. So that's the point I'm trying to make. If we're seeing now the recent sell-off and the pullback in a stock like STEM, that you could make the argument looks a little better than LLAP on paper, then it's going to be hard to change my mind here that we do not break down instead of up. But that's just my opinion, and I truly believe that, again, regardless of whether the fundamentals look positive or negative, we've seen situations where it doesn't look good in the numbers, but the stock goes up. Or it looks good in the numbers, but then the stock goes down, right? So we know anything can happen. But I'm telling you right now, in my opinion, that withdrawal of that $300 million bid to buy out LLAP from Lockheed Martin, the withdrawal of that bid, in my eyes, should tell you everything you need to know. So if and when, hopefully, this company gets the losses in check and is able to meet and exceed these future revenue numbers, then we can come back and reanalyze the situation, and we may be talking about a different beast altogether. In the moment, I think we drop back down. I think we retest lows and might even go even lower than these 52-week lows of 62 cents. But that is just my opinion, and I'm going to end it there. So once again, this is Talks About the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day, guys.